Want to do a sound check. Anybody, can you hear me? YouTube, Discord, can you hear me? Dan? All right, I'm assuming my sound is okay now. All right, again, everyone, welcome to Options with Doug, streaming live on Monday and Wednesday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. Thank you, Rajal. Appreciate that and welcome. Glad you're here. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Jug chat channel. You can post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is at Doug Pless. Just want to let everyone know that Bookmap is requiring everyone who wants to participate in Bookmap Discord to verify their account. Note it is free. You will need to go to this link, go to the link or scan this QR code on your phone. You will need to enter your email address that you use to sign up for bookmap.com. And then once you do that, you'll get a code. You verify that code, and then you can fully participate in Bookmap Discord, all the chat, all the streams in Bookmap Discord. There's a wide variety of topics. Here are the key tenets to my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price of many stocks and futures. That certainly applies to the large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the S&P 500 and the NASDAQ 100. And we'll certainly see some great examples of that today. And for the S&P 500, SPX is the underlying index. SPY is the ETF version of it index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And again, we'll certainly see a great example of that today. And for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And the NQ futures contract is a derivative of NDX. And when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Jug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning. I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow on Spotgamma Hero to confirm my thesis and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Jug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. Here's my agenda for today, Monday, May 19th. First of all, I want to go over news items, economic data, events, and earnings that are impacting the market today as well as the rest of the week. Then Then I'll go through my positional analysis. Then I'll review some setups from earlier today, and then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. All right, let's get started with news items. And really a pretty light week coming up. And let's go to the S&P 500, ES Futures, and Bookmap. Of course, I'm sure everyone is aware that last Friday afternoon, it was about 4:45 p.m. Eastern Time, right before the futures closed, but stocks continued to trade until 8 p.m., that Moody's downgraded U.S. credit rating. Futures dropped. Stocks continued to drop until 8 p.m., and the expectation for today was my expectation was for a move lower. All right, so here's the open yesterday evening, 6 p.m. And then market moved up, then started to grind lower. And then here's the cash open today. And we'll see what was driving that in just a few minutes. And just a blast off, a huge move higher that continues. That really seems to contradict the obvious thesis for today, which was bearish. More about that in a few minutes. All right, so let's talk about news for the rest of the week. For the rest of the week coming up, Tuesday, actually today there were a number of Fed speakers. Same for tomorrow. Really nothing on Wednesday. And then on Thursday, jobless claims 8:30, 9:45, S&P Global PMI data, 10 a.m. existing home sales. And then on Friday, 10 a.m. new home sales. So very light week as far as economic data is concerned. All right, so let's move on now to positional analysis. And again, this is the S&P 500 ES Futures. Before I take a closer look at this chart, I do want to take a look at a higher time frame. I'm going to go to SPX. This is the underlying index for the S&P 500. Weekend before last, there was positive news, sink or swim. Let's take a look at a slightly lower time frame. Let's go to a 30-day 1-hour chart. There's that gap up last Monday above the 5,700 level shown right here that had acted as resistance. Price gapped up, then 5,800 became support. And again, there was a gap down today, and then the rally that really began Friday is continuing, the steady grind up. And again, we'll take a look at what has been driving that in just a couple of minutes. All right, let's take a look at the levels on this chart. Remember, Friday was monthly options expiration, so there's usually takes a couple days after expiration for the new levels to stabilize. So let's take a look at first of all, the expected moves. And let me zoom in just a little bit here. All right, that might help a little bit. All right, so let's take a look at the key, first of all, the expected moves. The weekly expected move, lower and upper weekly expected move are shown by the dashed purple lines. That's based on the options market, based on the closing price for SPX from Friday. Then the lower and upper daily expected move are shown by the dashed blue lines. And that is also based on the options market, based on the closing price for SPX from Friday. And the weekly expected move, those levels remain in place for the entire week. And then the daily expected moves, those will change every day. I do post those in Discord every day the evening before. All right, the dark red lines are showing Spotgamma levels. These are based on Gamma-weighted open interest that provided to Spotgamma subscribers on a variety of trading platforms. Again, this is Thinkorswim, and it is a 30-day, 1-hour chart. I'm going to point out the key daily levels. First of all, the put wall is up at kind of a strange level here at 58.75. That level did move up pretty substantially from Friday. Then just above that, at 5,900, is the volatility trigger. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade with price to their delta exposure. That tends to enhance or increase volatility. Above that level, like SPX is trading now, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to their delta exposure. That tends to subdue or decrease volatility. And note that is based on Spotgamma's older model, what they call kind of a naive model that makes certain assumptions about traders and market makers' position. We'll more about that in just a couple of minutes. All right, so the volatility trigger at 5,900, and then 6,000 is the absolute gamma strike, and that's also the call wall. The call wall is the strike with largest net positive gamma that can be expected to act as resistance, and the absolute gamma strike is the strike with the largest absolute positive and negative gamma. So that's where most of the gamma-weighted open interest is concentrated. All right, let's wrap up our review of SPX with a 1-minute chart. This move up really began on Thursday. Though the put wall was not at 58.75 on Thursday. So move up, consolidation end of the day. Friday move up. Then this gap down, mainly based on the news over the weekend that began. Actually, the news came out on Friday. And then if you just take this, move it up to here, it's really just like a continuation of the move higher. All right, so the rally continues. Rally on Friday was due to a lot of zero DTE options, and that has been the case today as well. A lot of zero DTE call buyers driving price higher. We'll take a closer look at that in just a minute. Let's wrap up. Let's take a look at a quick look at SPY levels in play. This zero gamma level right here at 588. Kind of a launching point for the morning. SPY trading above its volatility trigger. And then the 595 level. And that is a large gamma level. And that's actually that SPY level right now at 595, large gamma 4 level. And then there's that There's that 588 zero gamma level, launching point for the move higher at the cash open. All right, I also have SPX levels on this chart. There's the put wall. Note that level acted as support, and that was before the cash open. 5,900 level, large gamma 2 level. Note also the ES, lower daily expected move, around that level acting as support. And then here's the ES, upper daily expected move. And I do calculate the ES and SPX expected moves independently, separately. And hello, Patrick. Welcome. Glad you're here. Patrick asks, what is the best way to leverage options knowledge when trading intraday futures ES? I'm going to talk about that the entire webinar today. That's what I'm going to talk about. That is the focus of what I'm going to be talking about. We'll take a look at some Spotgamma tools in just a minute that we can determine what options traders have been doing today and how that is driving ES. And that's definitely been the case. All right, so I have SPY levels on this chart, SPX levels, and key ES levels. And note there is a difference in price between ES and SPX. And today it's right around 18. So I'm showing SPX 5,900 at ES 5918. That is the equivalent ES level for that SPX level. And I do post the index relationships that I'm using every day, the ES to SPY and NQ to QQQ ratios, and the ES to SPX and the NQ to NDX offsets. I post those in the Options-Chat channel and Bookmap Discord every day. All right, so crazy move higher. Again, Patrick will take a look at what has been driving that in just a couple minutes. So let's move on. Let's take a look at NASDAQ. Zoom all the way out, similar chart. Downtrend. And NQ tested its lower daily expected move, rocketed higher at the cash open. Let's take a look at the underlying index charts. Let's go to QQQ first. All right, so levels in play. There are a number of levels, 515 on the downside, large gamma 4 level. There's the volatility trigger at 519. And let me check one thing real quick. All right, so for QQQ, there are more gamma levels up above. 520 is the absolute gamma strike, but there are more gamma levels up above, up to the 525 call wall. All right, let's take a look at an NDX. And NDX, there are Spotgamma levels above as well. Note the volatility trigger around that level. There was a cluster of levels right around there at the cash open, acting as support. And note NDX started to move up before the cash open. That move up began from the lower daily expected move and rocketed higher at the cash open. All right, so that is NDX. And let me go over shifts and levels now. For SPX, the volatility trigger put wall shifted higher. For SPY, the volatility trigger shifted higher, also put wall shifted lower. And the absolute gamma strike shifted higher. And for NDX, all four key daily levels, volatility trigger, put wall, call wall, absolute gamma strike, all shifted higher. That's very bullish. And it looks like they were right. And then for QQQ, the volatility trigger and absolute gamma strike shifted higher, also bullish. And again, it looks like they were right. In the face of what looked like it should be a down day, a bearish day. All right, let's wrap up our positional analysis by taking a look at gamma. And we've got a couple of views of gamma we can take a look at. First of all, let's take a look at market makers' position on the gamma curve at the beginning of the day. And this is based on their older model with what they call a naive assumption. This is market makers' position on the gamma curve at the beginning of the day for the S&P 500, NASDAQ, Russell 2000. Note with the exception of IWM, all these numbers are positive. And again, based on this older assumption, Spotgamma assumes that traders are long puts, short calls. Market makers have the opposite side. So they're long calls, hence the positive gamma. They have to trade against price to hedge their delta exposure. Then now, looking at this newer model on trace, we can see the red shading indicates negative gamma. And in negative gamma, price tends to move faster. We're in negative gamma, red shading, we're looking for faster moving, more of a trend day. And that is exactly what has happened so far. And we can step back a little bit. And one thing that was, I guess, a little bit puzzling let's go back to right around 10 a.m. is there were some positive gamma. You can see the blue shading over to the right, and also the blue Gex bars, gamma exposure, on the left. But as prices moved up now, it shifted to this negative gamma up above. And this is for SPX. And we can also see this on Equity Hub here. Peak negative gamma, right around 6,015. So what this is showing is, as price moves up, gamma is becoming more negative. And that's exactly what trace shows with this red shading up above. Whoops. Right at 6,000, you can see the very bright red shading, indicating faster movement as price moves up toward that 6,000 level. All right, so based on this, first of all, and a low stability index, 1%. I think it was up to 3% earlier. So I was looking for higher volatility, even though the market maker's position on the gamma curve based on the old model was showing positive gamma at the beginning of the day. And also, I think the obvious thesis was bearish, based on overextended markets, call-dominated options expiration on Friday, and then the negative or bearish news over the weekend. And initially, at overnight hours, that looked like that was what was going to happen, and with the cash open, that changed dramatically. All right, so we can take a look and see what happened at the cash open by taking a look at what options traders have been doing today. And this is the hero signal. So Patrick, here I go. I'm going to show you how options traders have been heavily influencing the market today. So for those of you who are not familiar, this is the Spotgamma hero signal, HIRO, hedging impact real-time options. And what this chart is showing is options trades and market maker hedging activity and price for SPX. So the white line is price for SPX, and the purple line is the hero signal. Again, showing options trades and market maker hedging activity, and this is the index signal. So this is showing options trades and market maker hedging activity for the S&P 500 index components. That's SPX, SPY, ES Futures, and XSP. And this is the total hero signal, combining puts and calls. And let's zoom in just a little bit. Actually, I'm gonna go ahead and shift to puts and calls so we get more clarity. I'm gonna have to jump back. All right, so the orange line is showing calls. The blue line is showing puts. And what this is showing is traders were buying index calls from the cash open, driving price higher. So when traders buy calls, market makers sell the calls, and they have to buy futures in this case to hedge their delta exposure. And that was clearly driving price this morning, the call buyers. And again, market makers hedging by buying ES futures. And we can break that down a little bit. Zoom in to SPX. Traders were buying SPX calls, and that lasted until about 10:15. And they were also buying SPY calls, and that really lasted until about, just after about 1:10 p.m., something like that. All right, so that is looking at the index components, the index signal, and also SPX and SPY. Let's take a look at the equity signal. So what this is showing is options trades and market maker hedging activity for all 500 stocks in the S&P 500 index. And what this is showing is it was primarily put sellers. That's shown by the rising blue line. The direction of these lines are shown in terms of options delta. So a rising orange line indicates traders are buying calls, and a rising blue line indicates traders are selling puts, both positive delta. And that was driving price higher. Note this institutional order here. We can track this down a little bit more as we go through a few of these stocks. So the large block order that came in right around 10:06, 10:07. And then that seemed to be the end of the equity options move higher. They took the foot off the gas. So call buyers, put sellers, driving price higher in the S&P 500. Let's go take a look. Go back to ES now. And let's zoom in. And we'll take a look at the clues here in Bookmap. We'll go from 9:30 to 1 p.m. All right, so first of all, looking at the subchart, you can see that large traders were buying this move with iceberg orders. That's shown by the rising light blue line. So they were fading this move down and actually really started buying right here at the bottom of this. So that's kind of kicking off this move higher that happened before the cash open. We saw that in NQ. And then as the call buyers came in at the cash open, ES launched higher from the 0 gamma level. That's the SPY 588 0 gamma level up to the 593 volatility trigger. So about a 50-point move higher in ES in less than an hour, about 45 minutes. As traders were aggressively, again, buying calls and market makers selling calls and buying ES futures to hedge their delta exposure. And you could also see in the subchart cumulative volume delta rising. That's shown by the magenta line, aggressive buyers, as well as buy stop orders shown by the rising yellow line, helped to fuel that move higher. So really, call buyers and large traders with iceberg orders buying that dip, and price rocketed higher. A bit of consolidation, then about 11:30, price started to move higher again. Let's see what options traders started to do about 11:30. So 11:30, some call buyers start to come in again. Not nearly as aggressive as they were in the morning. Let's check the equity signal. And note the call buyers start to come in the equities about 11:10 here. And price, again, this is showing price for SPX, start to move higher. All right, so it looks like now there may be some consolidation in the equity signal here. Traders have started buying puts and now selling calls. That is the equity signal. Let's check the index signal. And pretty similar story. Call peak right around 110. Now traders selling calls, buying puts. So both the equity index and the S&P 500 index and equity signals are in agreement. All right, let's take a look at NASDAQ. I'm going to go back to the total signal. Take a look at NASDAQ. NASDAQ also bullish. Move up in the morning. Consolidation. Consolidation. Move up again. More consolidation. Price pretty much chopped sideways up until about 11:30, 12 o'clock. Started to move higher again. And now a couple of peak patterns, and traders are starting to take negative delta positions. This is the index signal for NASDAQ showing NQ, NDX and QQQ options trades. Let's take a look at the MAG 7 signal. Pretty choppy. Shift over to puts and calls. Also pretty choppy. All right, let's take a look at NQ. And IBOM, good afternoon here. Welcome. Good to see you. Glad you're here. All right, so NASDAQ blast higher in the morning as traders were taking positive delta positions. There's that consolidation, then the grind higher. Move up to about 21,550. And now as traders have taken start to take negative delta options positions, price is moving lower. And we'll keep an eye on this, both the S&P 500 and NASDAQ, see if this is just another pullback or the beginning of a move lower. And just in opposition to the S&P 500, large traders were fading that move with iceberg orders. That's shown by the falling light blue line. Remember, the large traders were buying iceberg orders in the S&P 500. Just the opposite in NQ. And unlike the S&P 500, there were some aggressive buyers shown by the green volume dots here at the bottom near the lower daily expected move and 21,150. All right, that's NASDAQ. Let's take a look at some stocks, then we'll get to the live market. So first I was looking for stocks that were helping to drive this move lower, move up in the morning. Let's start with Amazon. Amazon bullish opening drive, a lot of aggressive buyers. You can see the green volume dots and a quick move higher. Let's see what options traders are doing in Amazon. I'm going to shift to puts and calls. Go to Amazon. And it was call buyers in the morning. Up until about 10:10, call buyers, shown by the rising orange line. Took their foot off the gas about 10:10, and then Amazon consolidated. Some sellers came in. So Amazon makes a quick move up and now is just consolidating. trading sideways. So again, bullish opening drive, call buyers driving that move higher for Amazon in the morning, and now consolidation. All right, next stock, Meta. Pretty similar picture, bullish opening drive. Let's see what options traders are doing. Let's go to Meta. We'll zoom in. So in Meta, initially put sellers, taking advantage of the dip, selling puts, as shown by the rising blue line, and then about 5 or 6 minutes after the cash open, call buyers start to come in, driving price higher up until about 10:10. So bullish first 40 minutes, just like Amazon, and then consolidation after that. Also a lot of aggressive buyers, green volume dots, pullback entries. Now Meta consolidating around the 640 level. All right, back to Hero. Next stock, Microsoft. Microsoft, very similar pattern. Bullish opening drive, calls and puts. So that's a bullish opening drive, and also bullish momentum with puts and calls moving in the same direction. So traders are buying calls, selling puts, bullish opening drive again, bullish momentum. And here on Microsoft, they took the foot off the gas before they did for Amazon and Meta. So foot off the gas sooner for Microsoft, and then consolidation after that. Looks like some call buyers came in again right around 12:20, helping to fuel the move higher and the indexes that happened around that time. Back to Bookmap, take a look at Microsoft. Sharp move higher, bullish opening drive, aggressive buyers, green volume dots, and then consolidation. Then there's that move again just after noon as the call buyers came in again. All right, let's take a look at Tesla. A little bit different picture in Tesla this morning. Looked like it took a little bit longer for that bullish opening drive to get going. And let's take a look and see what options traders are doing. So initially they were selling puts, but the call buyers came in later on. Let's shift this over to the total signal. We can get a little bit more clarity. All right, so the hedging flow really didn't shift bullish until about 9:45. Note this peak pattern here, and the flow alert signals a potential shift in hedging flow from positive delta to negative delta. That's exactly what happened. So a bullish setup there, and then a bearish setup with that peak pattern and the flow alert. Let's go take a look at Bookmap. Let's zoom in on this. So Tesla was making a series of higher lows in the morning, and then the hedging flow, remember, that shifted in the total signal about 9:45, 9:47. Multiple pullbacks to VWAP. This is this light blue line here. And then the move higher until that peak pattern when options traders took their foot off the gas. That was right around the 343 level. And liquidity at that level. Note the liquidity in the heat map and Bookmap is showing a history of limit orders in the order book. And these levels of higher liquidity often act as magnets for price. And that's exactly what happened. So multiple pullbacks to VWAP, liquidity targets up above, as hedging flows shifted from positive delta to negative delta. Patrick says it seems very interesting. However, Spotgamma costs $300 per month, along with $300 with MBO. I assume you mean for Bookmap. I haven't checked the prices for Spotgamma recently. I know they did have a price increase. I guess it is up to $300, and Bookmap. Not sure either. But yeah, it can be expensive. All these tools definitely can be expensive. It's worth a try. Keep watching my webinar, see if it has any value for you. And I would suggest when you get started, just start with part of that. Start with Bookmap, and then start with Bookmap, and then maybe add MBO data. Let me show you one other tool that's very valuable in Bookmap. So Bookmap, if you want to get started in Bookmap, you can go, if you want to trade in Bookmap, you can use Global Plus. If not, just get Global. Then futures data is fairly inexpensive. I use Bookmap data. I think it's less than $40. And then there's a very valuable indicator that I'm not showing, and this is the Market Pulse price change indicator. Market Pulse is included with the MBO bundle or a separate subscription, but the Market Pulse price change indicator is free. So you can use that even if you don't subscribe to that Market Pulse or MBO bundle. So let's zoom in, see how we can use that. In a rally this strong, it's really going to be difficult to find entry points. I like to enter at extremes shown by the bright red here. So this is Market Pulse price change, and at extremes. And I'm looking for these bright red areas in an uptrend as entry points for long. And they typically line up very well with entry points for long. And this would be for a slower moving market. The price change is not going to go all the way down to extremes in such a sharp move higher like the one this morning. Let's zoom in on that. Let me turn this off. Zoom in a bit. So a few Market Pulse price change extremes. Entry points for long. So my suggestion, Patrick, is to start with Bookmap, learn to read order flow. You can watch Bruce's webinars. Also, he has great classes on the Bookmap Learning Center. Just released a new class with 10 setups based on supply and demand. Excellent stuff. I suggest watching that. So start off with Bookmap, Bookmap data, futures data, and then learn to read order flow, and then you can add on from there. Add on from there. Oh, so are you using Bookmap already? And Luciano asked, can you explain something small with Bookmap, with the dome, how you incorporate with your trading? I normally trade from the chart. So let's open up. Let me turn off Trade Evade here. That's my futures broker. Turn on Trading Simulator. And this is how I like to trade. I like to trade on the chart. So I just turn on chart. Let's pin that. Start with one contract. All right, so let's zoom in. All right, so it looks like now, remember we were taking a look a few minutes ago at the hero signals moving lower for both the index and equities, and that is definitely looks like the case now. So let's go back to hero, go back to let's start with equities, signal moving lower, index signal also moving lower, sharply lower. So that peak pattern right here, several very nice short. Check equities again. Another peak pattern a few minutes later, but now moving lower. All right, so we missed. Maybe we can look for a pullback for short. So I would, again, the way I like to trade is on the chart. I don't use I use the dome on my broker's platform, but not in Bookmap. So if I want to trade a Bookmap, I just trade from the chart. So let's say I wanted to take a short here. If there's a pullback to this 594 level, then I would right click, and that would be a limit sell order right in this zone over here to the right of this right line, and I can cancel all. Oh, Patrick, yeah, I'm not sure what all that means. You've been using Bookmap for 3 years, so you're 3+ years, so you're very familiar with Bookmap. One thing I like to look at, look for also is divergences in this. In market pulse price change. Now, when I'm trading, I'm looking at 3 screens. I'm looking at Hero on one side, Bookmap in the middle, and then Trading Platform on another screen. Let's just check Hero. So if I have to jump back and forth like this, I would not be able to trade effectively. All right, so Hero signals continue to move lower. Let's zoom in. All right, so it looks like there's some large traders buying with iceberg orders. Looks like I might have missed that. All right, let's cancel that. And Luciano asked, do you also consider CVD as some type of divergence in price and volume? Yeah, I do look for divergences in CVD. And also as a confirmation of price. Let's step back, take a look at the bigger picture here. So ES has moved down quite a bit from the high. Looks like 59.50 might have been another short entry. Keep watching this. And there's another indicator we can turn on here. This is the stops and icebergs on chart indicator. So I look at in the subchart, I look at the in sum mode, so I can see net for the day, what traders are doing with iceberg orders. That's the light blue line. Also stop orders. And then the on chart indicator shows the individual events. Let's check Hero. So a little bit of a curl up in the S&P 500. Let's open up another tab here, and we can move over to the equity signal. Full screen. So that's still moving down. A little bit later again. Yeah, maybe not. Maybe it'll tag that. All right, not ideal. Short at kind of the lows of the afternoon. All right, so anyway, Luciano, that's how I trade on Bookmap. All right, so it looks like this is going to be stopped out. Have a pretty tight stop here. All right, so let's turn this off. Well, we can leave it on. All right, back to, let's check Hero again. All right, so Hero signal starting to, we're turning to start higher. So again, not ideal. Taking a short, lows of the day. All right, questions, comments? Now, if I were looking for a short, this is what I really should be looking for, this bright green. And Luciano asked about the stops in ICE. What does 82.5 mean? So 82.5 for icebergs. I'm not sure. Sorry, hard to trade. And all right, so I should have done what I said I was going to do in the beginning, is wait until this 594 level and take a short there. All right, 82.5 would mean 82 contracts executed in 5 different executions. All right, so again, I should have done what I was said I was going to do. Wait until that 594 level. Let's go check. This might be a good opportunity for a long. Let's check. Hero. No, it's now both Hero signals now turning lower, it looks like. Well, maybe not. Let's see, Luciano, if we can find an example. Right here, this means these are buy iceberg orders. 125 contracts and 2 executions. All right, last call for questions, comments. Let's check Hero. All right, so both the index and equity signals have pretty much flattened out, maybe trending a little bit higher. All right, last call, questions, comments. All right, everyone, I want to thank you very much for watching. Thanks for your questions and comments. And have a great afternoon, and I will see you on Wednesday. Thanks. Bye.